Have you ever taken a trade that looked perfect on one time frame, but then market completely reversed against you? That happens because you didn't look at the bigger picture. In today's video, I'm going to be showing you how to use multiple time frame analysis to your advantage. The secret weapon professional traders use to align their trade with market structure, reduce fake outs, and also increase wins rates. Hello, this is Precious. In case I just see my face for the first time, and this is a trading channel. If you're a beginner, I have a playlist dedicated for beginners. Please explore the channel and you can start your trading journey from there as well. By the end of this video, you will know how to pick the right time frame. Whether you are a scalper, you're a swing trader, or you are a day trader. Multiple time frame analysis is the process of looking at the same market across different time frames. Every time frame tells a different story. I will not just open my chart and then make decision from one time frame. I want to know exactly what is going on the higher time frame to the lower time frame. So I'm working my way from the higher time frame to the lower time frame to enable me make the right decision in the market. I'm going to be breaking it down into 3 categories because different traders use different time frames. Let's start with the swing trader and how to align your entries with the higher time frame trend. So for a swing trader, we are going to be starting our analysis from the monthly time frame. Even though I'm going to be going through the weekly as well, but because I want you guys to see how these time frames aligns with each other. So we are going to be starting our analysis from the monthly time frame, then we'll work our way to the daily time frame. So the monthly time frame gives us the long-term trend of the market, the long-term direction of price in the market. Then we go to the daily time frame and we mark out our key points on the daily time frame. And then we look for entry either on 4 hour or on 1 hour. We have the higher time frame as our 1 month. We have the middle time frame now as our daily, and then we are going to enter our trade either on 1 hour or we can use 4 hour. So you can see we have 3 time frames to work on to take a trade. If you are a day trader, you start your analysis from the weekly time frame. Start your analysis from the weekly time frame. You understand the direction of price in the market, the long-term trend of price in the market. Then you move to the daily to mark out your key setups and then your entries in 50 minutes or 30 minutes. Now for the scalpers who want to hold position for a short period of time, you start your analysis from 4 hours and then you mark out your entry on 15 minutes and then you enter your trade on 1 minute. Now that you understand how this time frame works and the time frame requires for the type of trader that you want to be or the type of trader that you are, now let's go right into the charts and now we can see how these things aligns with what we have said and how you can also use it to become profitable in the financial markets. So our case study today is going to be on GBPUSD. Okay, so let me this is monthly. So the monthly, we are going to be starting from the monthly to understand the direction of price in the market. But I have markups here, so I'll just go to let me just pick another one so we can get started. Copy again with my students in our last class. Let me just remove this one so we can. Okay, great. So this is the monthly time frame now. So we need to determine the direction of price in the market. Let's use our path so to mark out our higher highs and our higher lows first. You can see we have this low here, move upward here to create this high, and then we have this low here as well, and then market created this high, and then we have this low, and then we have this high as well. You can see we have this high, and then we have I'm seeing this very good break of structure here. So you can see we have this break of structure. So this is a very good uptrend. This is the monthly. So one candle here is for an entire month. So you can see for the month of July, GBPUSD was bearish in the entire month of July. So this is let me change I know some of you are not beginners, but there are some beginners that want to, so they don't get lost. So this is for July. You can see the bearish candle here. So that means for the entire month of July, GBPUSD was bearish. This is August now, and then we have this bullish candle here. But then we have this break of structure to the downside here that price reacted from last month, and you can see, so price reacted from this. So the reason why we don't look for entry in this higher time frame like the monthly or the weekly and the daily is because of the pips. You know, this is just one candle for an entire month, so that means this can be like over 100 and something pips. So you don't want to do that. You want to go to the lower time frame and get your entry right precisely and accurately. So you and I can see that this from the monthly time frame. Now what can you say this trend is? Because we said one characteristic of an uptrend is having a break of structure to the upside. So can you see that we have a break of structure here to the upside? So now we are expecting price to come here, because price has reacted from this bearish order block here, then we got a pullback here. But at the end of the day, the long-term trend, we are expecting GBPUSD to be bearish. You can see this happen here. Market created a break of structure here. This is a break of structure, and then you could see came back here, came downward, mitigated our order block here, mitigated our bullish order block here, and you could see market gave us this high here. So now market came upward here to mitigate this bearish order block. So you can still have a reaction here. So now we're expecting price to still continue to come downward, and then we can have continuation of our bullish markets. So that is what is happening here. Now we know that this is a bullish market, but this is an internal retracement. So now let's go to weekly and see what is going on. We have structure in structure. The higher time frame, they are just roadmaps. The higher time frame shows you the city, then the internal time frame shows you the streets in that city. Do you understand? It just shows you, oh, this is a road to the city. It didn't tell you what is going on in the city. Do they have light in that city? Do they not? You know, nothing like that. It just shows you this is the road to the city. Now you have to go to the lower time frame to understand the streets that have light in that city. On the monthly, well, now you see we have you can see we have structure. You can see that means price didn't just move upward like that. Price gave structure before moving upward. We still have a sell opportunity, you see, because markets moved down, move up again, move down, move up again. So there was a sell opportunity in this bullish market that we have here, and the monthly time frame aligns with the weekly time frame, telling us that market has been bullish. You see, from the monthly we mark out this break of structure. Weekly, you see, we have this break of structure at the same point we mark out the break of structure on our monthly time frame. So that is what we are looking at. You see the reaction here, the pullback here. This is it. We have pullback, but this pullback here, now we have structure. So market pullback here, gave this high, pullback again, right? Didn't just pull back straight. So you can see the internal retracement we are having here. Let's go to the daily time frame and see what is going on there. We marked out this structure on the weekly time frame. So let me change the color to let me change it to this color. So let's just say this structure here is our weekly time frame structure. I marked it purple. This is purple weekly time frame structure, and then this red here is our monthly time frame structure. So now let's mark out our daily. See, market created the high here, move up, created the low, created this high, created the low. You see, move all upward here to create this high, came downward here to create this low, create this high. Let's change the line to, okay, let's use blue this time around. So you can see how this works. So you can see that we have sell opportunity. Even though this is an uptrend, we have sell opportunity in this bullish markets. Okay, so now let's continue with what is going on now in the market. That is what we need to know. So this is the daily. Let's remove this thing so we can have a good chart. So this is the daily. Definitely this is an internal retracement. Now we are still bullish on the daily time frame because we're having structure to the upside, but then we got a change of character here on the daily time frame. So we have our break of structure, our change of character here on the daily time frame. So you can see market mitigated our resistance level where we marked it on the monthly time frame, and then change character here, and we have a break of structure here. Even though on the monthly time frame you can see that GBPUSD is going to be bearish for a while, but then market still reacted from here. Market reacted from here because we have a support level here. We have a break of structure to the upside here. We have a support level here. This is a bullish order block. So market was able to take out our daily time frame low here and gave us a change of character. Move downward again, and you could see price reacting from here. Price reacting from this one here, because this in a bearish market now, our order block is the last bullish candle before a strong move downward. See, we have this strong move downward here. We have a change of character here. So price reacted from this zone here. This is our resistance. This is aligning with the weekly time frame and also the monthly time frame. The weekly time frame shows us we having internal retracement. The monthly time frame shows us the same thing. Then the daily time frame showing us we already have a change of character to the downside here. That means bearish, right? And now you want to go to 4 hour or 1 hour to get your entry, right? So you can see where we marked here, right? You can see how price reacted from here on the 4 hour. We marked that place as our daily, let me undo. So this is where we marked as our daily resistance level here. So this is what I mean by marking key points on the daily time frame. So because my entries, I want to enter from maybe 4 hours or 1 hour, we are having a pullback here because price is trying to create structure and an opportunity for re-entry. Let's go to 1 hour. Break of structure here. You can see price reacting from this, but then this is a bearish market. But that does not mean I can't take a buy here, like follow a pullback. I want to trade this pair now, and then I want to swing it. This is exactly what I'm going to do. Mark out my entry point here or here, or 1 hour. Mark out my entry point on 4 hours, 4 hour or 1 hour, and then I wait for price to mitigate, and then I'm already in profits. So this is how easy it is to work your way from the higher time frame to the lower time frame. Over analyze too many time frames. Focus on just 3 time frames to analyze. For example, the 4 hour, 50 minutes and 1 minute. Do you understand? Just 3 time frames to analyze to take a trade. Don't analyze too many time frames. Wait for confirmation on your entry time frame. The whole point of the multiple time frame analysis is to make sure you are not fighting the market but flowing with the trend in the market. Next video will be on market structure. Market structure is the king in the market, and I want you to subscribe so you don't miss out on this one. Thank you for watching. See you in my next video.